The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to the closing bell for January 15th, 2025. Keith Harwood here for Yellow Tunnel. Standard disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, myself are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your own personal financial condition, please consult with a registered financial advisor. Information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and or the team at Tradespoon or Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. So please consider that trade ideas that we'll discuss today for your own personal financial suitability in your investment trading accounts. Good afternoon. It's been a few hours, Fred. I hope that everybody has had a good day so far today. Obviously, the market is having a good day today. That's the easy part. Now the question is what happens next? Control moving back to the bulls' hands. There's no fight against this recovery today, which is, I think, a positive input to see. We're not seeing aggressive profit taking into the bounce back. We're not seeing aggressive pullbacks. Generally speaking, it looks like the market is accepting the information that we've gotten over the last, call it 36 hours in terms of CPI, PPI, and earnings. Now, what happens next? That's what we're going to try to evaluate and try to see if we can come up with some pretty reasonable, responsible answers. But the bear seems to be towing whether or not they should stay in the market. The bull seems to be holding control for now. We fail. Every time the bear seems to get into control, we fail. So we got to think about that in terms of probability of success. Had we not had this sort of repeated selling of rallies, I would be looking at the probability of success as being a bit higher than it is right now. I still think the bull play has the higher probability of success, but it may not be in that 75, 80% odds that we would have had with this kind of input, 2 months ago. What we're getting it at right now looks like the probability of success is still on the high side for the bull, but maybe a little bit questionable because we haven't pushed through all the way. That may happen tomorrow anyway, especially if the earnings continue to come out strong. Return on capital getting a little bit more attractive as the VIX comes down. That's always nice to see for those of us that like to buy options. For those that look for credit spread options, capital on those credit spreads is down to offset it to basically create the same expected value. The bull, we had some of the move, reduces the magnitude of the move potential, but with a correctly and properly structured trade, I think we still have good potential out of some of these bullish plays. So, we wait for 2 to 3 days to confirm a trend change. It seems like we're right in the heart of that right now. Volume in VIX reaching that extreme-ish level on Monday. It seems like we got as much as we're going to get for now. But if something bad comes out, maybe that'll change. What bad could come out now? Poor earnings, a Fed meeting in 2 weeks. That could be an input that would really drastically shift the tone in the market. But with the 10-year yield falling, the comfort level increasing, I think we are starting to accept this market recovery may be real. Earnings dates, of course, key focus for everybody as we come into more financial earnings tomorrow morning with Bank of America and Morgan Stanley and some smaller banks. Taiwan Semiconductors, UNH, United Healthcare, had JP Morgan, Citigroup, BlackRock, Goldman, and Wells Fargo this morning. Those all went up. So we're seeing good bullish inputs to the market with respect to earnings. The first big earnings that came in, we were basically 5 for 5 in terms of bullish reaction. And that's, I think, a helpful point for a lot of us. And seeing the extra input of the fundamentals of PPI help push those stocks up further than they would have just independently off of their earnings, it appears. So that helped push through some of these, or push to, or even through some of these iron condor kind of concepts. And that's something that I think we have to make sure that we address as we go forward. Looking at this morning, we looked a little bit at Tesla. Tesla's earnings comes out at the same time as the Fed meeting. So if those are coming out at the same time, it may not be the opportune moment to go for an earnings play, knowing that we could have a second input causing drastic movement for the market. I think we're seeing that sign of the bottoming process for this pullback. It's buyable dips. Unclear on whether we have sellable rallies anymore. That's the question we have to ask ourselves as we go forward. The market in the 10-year yield has dropped to 4.65. If I go into let's see if I can get a 15-minute chart on here just to give you guys a little bit more picture here. On the open, started a little bit weak, continued lower, bottoming out around 10.15, the bounce back and then fade. There's no real major bounce back in the 10-year yield. Overall, we are in a recovery mode for the market and a comfort zone for the 10-year yield. I still think that we would like to see this 10-year yield down closer to 4.5% to really create some cushion and reduce the fear of a breakout in the 10-year yield and inflationary pressures spooking the market, excuse me. But for now, this is what we've got, and I think that's a pretty good starting point. And our big risk on indicator of Bitcoin is showing risk on. 100,000, 6 figures again. So Bitcoin definitely showing us that risk on behavior that seems to be helping tech following along, financials participating as people look for risk assets to allocate capital into. So this Bitcoin move, very bullish for those looking for momentum names. SPY back above the 20-day moving average, towing the 50-day moving average, getting into a general bull formation here. MACD crossover seems imminent. We've got a lot of positive things to look at for that from that perspective. The descending lower highs, we're towing it right now. So it took about a day to get from this potential break of the 100-day moving average to testing the breakout type scenario that pushes us, I think, back to the previous highs. So looking for 610 if we get just a little bit more oomph. If I see 596 tomorrow in SPY, I think our probability of testing out 608 to 610 range looks very, very good. So with us right at this inflection point, I do like being on the bull side, and I'm looking to see whether or not we can push through to get that much more bullish in our approach to the market. VIX down to 16 now. So it was 17 this morning, 16 now, 15 maybe our low for now, unless we get to complacency mode. If we get down to 13 or 12, the market complacency seems like it will have been priced in. That can be a little bit concerning, especially if it's coming from buy writing of positions. So that could actually create a spike upwards if people have aggressively written their positions, sold out calls against long stock, push through the long call strike. We could see a spike. We could see a spike in realized volatility that comes from it. That's an exciting potential that could actually help fuel the move to a new high. We'll kind of see how it goes. For now, it looks overall pretty good. SQDX down a little bit, not a drastic drop. People are selling at the money options, bringing down puts a little bit, not worrying about the tail risk. But not bringing it down aggressively. This is pretty normal behavior for SQDX overall for a market rally with the VIX dropping. Certainly, there are going to be some people looking to hedge their risk, given that we've had reversals over and over. But, it's not aggressive by any means. What would indicate aggressive hedging of portfolio risk to me would be if we saw SQDX up with the VIX down. Then that would certainly indicate a lot of risk reversals and or just straight outright buyers of puts, or I guess sellers of credit put spreads, where the out of the money put are coming up and the at the money options are still coming down. Not seeing that quite yet. So more likely people are just kind of and happy to just collect some premium from selling strangles or selling out of the money calls as they buy right to their position to finance some of the hedges that they already put on before the big break. All right. Pretty basic. Back up the truck. Oh gosh, Bob's here. Now we got to buy everything just to show Bob that we can back up the truck. Prove you right. No, welcome, Bob. I'm glad to see you here this afternoon. We talked through a lot of interesting ideas this morning. We'll talk through some more right now. Starting with tech, 2.5% now. So tech actually performing pretty much in line with SPY. 2% for SPY, 2.5% for tech. It's about the norm. So, we should have probably seen closer to 3% for tech if it was going to stay dead in line. But overall, pretty good. Semiconductors lagging a little bit, only up 2.5%, with tech up 2.5%. Usually I'd see SMH up about 4%, with tech up 2.5%. Basically, it seems like people are still a little leery of buying into the NVIDIAs. Yes, it's up 3%. Should have been up more with tech bullish. They're reluctant to buy into some of the dogs like AMD, or Micron's a little less of a dog recently. That's starting to actually participate a bit more throughout the day. Intel only up 2%. Intel, if it's going to be performing in line with a semiconductor move, the percentage move should be about twice what we're seeing in semiconductors on the whole. So semiconductors up 2.5%. I should have seen Intel up 5% if it's going to participate at its normal implied volatility ratio. So double the implied volatility, double the percentage move. Still a laggard, still a dog. People don't love it yet. I'll touch on TSM now. We talked about it a bit this morning. I'm looking for some sort of earnings play here. Our normal realized volatility on earnings is about 5%. We're pricing in about 6%. 5% may not be enough this time. 5% puts us near, but not to the highs. 220 is more in line with the previous highs, our better key resistance from a technical perspective. 5% will put us down to 195. I think that 190 makes a little bit more sense from a technical point. 195 was the December 30 or January 2nd low, roughly. 190 more in line with the December low. I'm looking for that as a potential mover. I think that's got a little bit more potential downside, that there is an opportunity potentially here for a 195, 190, 185 put fly. Currently priced out around 40 cents on the put fly, 215, 220, 225 call fly. Currently being priced out around, 90-cent credit, 40 cents on the call fly. So about 80 cents for the pair. I still think that makes sense. We didn't move much off of the needle from this morning in TSM. 15 up, 15 down, 7.5%, 8% kind of move. Looks pretty in line with the technicals, pretty in line with the open interest. Very large open interest here at 220 with 31,000 plus another 15,000 trading volume today. Probably puts in open interest closer to 35,000. 190 is, kind of the same as the 190 or the 200 and the 180 line in terms of magnet potential. But this would be a very muted drop. This would be a much more, the normal drop would be 195. What I'm looking at for symmetry is 190. It's a little bit more open-ended on the downside given the magnet effect, but 220 certainly looks like a magnet potential on the upside. All right. IonQ, good. I touched on IonQ, but not till after it started moving. So IonQ up 35% now, gave another 10% on top of what we were looking at this morning. Somebody was asking for some ideas of stocks that have, sort of newer technological advancements. The quantum computing space makes a lot of sense to me. From that perspective, when you're looking for some potential volatility, IonQ isn't just going away just because of NVIDIA's CEO not liking quantum computing yet, or Zuckerberg not liking quantum computing yet, or other tech heads not thinking. It doesn't mean they're not going to keep innovating. The question mark comes when they have to potentially raise capital to continue their technological advancements. There are some other names out there that I think can be watched. QuantumScape, another quantum computing company that is actually lagging today. It got very exciting here on December 26th, right after Christmas, a bit more into the new year. This may have IonQ, clearly, though, a much more talked about name. This is just a smaller name if you're looking for something that is lagging and may still participate. But I guess I should warn, PLTR in AI has been, a killer. But then you go to like UiPath that I've looked at a number of times and traded a few times. The responses have been bounce and then fade, bounce and fade, bounce and fade. So getting into clearly giving a better return for the bull, looking for that market dynamic. So maybe that means IONQ is the big winner, the big leader, and that's where I should be focusing my energies. But I keep trying to find something that might catch up. Yeah, I mean, so Bob, per your comment, so you said you watched the CEO on Bloomberg, and you said that the CEO of NVIDIA was misinformed about quantum uses. So this is kind of a natural thing where NVIDIA is going to sort of play down the potential impact of quantum computing if they're not in that space or at the lead of that space. You know, people tend to play down AI if they're not at the head of the AI crew. As they start to develop more within that space, they say, oh, look at how amazing quantum computing can be, and we're now the market leader. So there's sort of a natural dismissiveness of new technology if you're not at the forefront of it, and then adoption of it, and then pumping it up and saying, now see, we're the leaders. And we were dismissing the potential impact it could have for X amount of time when others were focused on it and we weren't. So the MMFI, oh yeah, the market breadth reversals have been very consistent. So that's good to breadth indicator. But I do need to look at that a little bit more and see where you're seeing it, because if it's been a consistent predictor of some of these reversals, that is a very valuable tool, at least as long as it keeps working. One of the other ones I also actually look at is the skew index. When we get to these numbers in the 175, 180 range, that often signals a market high. So this is comparing puts to calls, where skewed X, SDEX, is just comparing puts to at the money options. When we start seeing this to get to a high level, which it prints at the close every day, so I don't get an intraday range, that actually can often signify a market top. So I got to watch that tomorrow, see what the number prints at. If it goes high, it tells me that the market is starting to trade a little bit more of these risk reversals for hedging purposes, and getting aggressive in their concern for that. You know, when we got to the lower levels here around 150, that was the bottom. 175, 180 can be a good top indicator. But I expect the VIX to have to drop a bit before we get to that point. Maybe 14% VIX would be the point where I'd have a real concern that we've hit major resistance. And right now we're just not there. So there's certainly unknowns right now. We're getting realized volatility high enough that people aren't ready to push the VIX to, you know, single digits quite yet. But I don't expect to see that until we get, you know, the market at like 620 in SPY, you know, above the previous 610 range. Let's go to small caps. Small caps actually getting faded a little bit after the initial leadership. So you can see they opened a little higher than they were. No, they are now only up 2.25% right now. I honestly don't see a lot of logic to this, with financials being the leader. You know, domestic names are supposed to be the benefactor of the political policies that are coming into place. Small caps are supposed to be our leadership. Small caps are supposed to be where we go. But we hit resistance. And I think the fact that people have been burned by small caps since the election maybe is what's muting some of the response right now. I would have thought 227, 228 was in the cards today, with the S&P continuing bullishness and the tech sector continuing bullishness. But for now, people are going back to old reliable tech for their momentum plays. When we go into XLF, you can see like XLF, phenomenal today. Broke above the 50-day moving average, pushed above the 2025 highs, pushed above the highs after the Fed bounce. So we had the Fed liquidation, pushed back near the Fed level, failed. Now we're back above the pre-Fed level. So financials are telling me that the inflationary concerns are diminished. Financials should also be indicating more bullishness in small caps, and small banks also looking very good, but they're actually getting faded a little bit today. So big banks getting bought, small banks getting sold a little bit. Maybe it's because we just need some more small bank earnings first. And as we see them, then the region's financials may have a nice bullish earnings. It's 2 days away. It's on Friday morning. Maybe Zion earnings next week. You know, maybe State Street. earnings on Friday before the market opened. State Street's towing near highs. So, if and when that earnings comes out, if it comes out on the, or sorry, not when it, if it comes out, when it comes out, if it comes out on the bullish side, we may be resuming more of this kind of bullish trend where we get rallies and then we get overbought and pull back. And then we rally and pull back to the 20-day moving average, rally, pull back to the 20-day moving average, lather, rinse, repeat. So it seems every time we get above the Bollinger Band, it's a profit-taking opportunity to then wait a week or two, get back in. Get above the 20 or the Bollinger Band, wait a week, get back in. Get above the Bollinger Band, wait a week, get back in. It was a pretty predictable, well, not predictable trend, but now it's a pretty reliable pattern that I think gets fed into a lot of models if and when this starts to resume the uptrend. But earnings will be the key for that. So I'll be watching State Street starting next week. I think that's a good avenue for me to look for some potential investment here. But that's a next week trade. So what else is there today? Well, we got the earnings one. I mentioned this morning UNH thinking a little bit bigger range than the market is for the earnings analysis. So we're pricing in 4%, realized it's been around 5%. And we've had some big changes to the company since the last earnings. As we all know, the CEO was assassinated, and it was a very terrible event. I don't know what that does to the stock, but I know it makes the stock a little bit more unknown. So if there's more unknowns for the stock for the future, because we have a new head in place, I start to think that maybe the stock has big movement potential. 500 looks like a really good support level. It's a big even number. It's right at the lows post this major liquidation. 580 looks around the right range for some resistance to start to kick in, maybe up to 590 now that we're up to 45 bucks above 500 for symmetry's sake. But I was looking at it this morning with a 510, 500, 490 put fly paired with a 570, 580, 590 call fly. 580 does not have a lot of open interest. Maybe it could even go up to 600 where we've got more open interest. 500 does have pretty decent open interest in a $500 stock at 5,000 open contracts. That looks like a magnet if we get bearish. There may be some for 510, but it almost looks like the market already has a bit of a 510, 500, 490 put fly positioning on. And on the upside, I honestly think that it looks more like people have got like a 590, 600 call spread and like or a 570, 600 call spread. So more of the bullish bias without the butterfly positioning. Just as I see the spread open interest for where we've got likely buyers and then selling pressure most likely at the 600 level. I'd have to look up the dealer exposure, which I don't have up right now. But I will look at that tomorrow morning after the earnings and hope I've got it right. But, a little late in the day for me to look at it up right now. So I got to get more into that as we get back into these earnings plays. So mea culpa on that, but we'll certainly do that. Oh, Fred, you good on audio? Okay, yeah, it says audio back. All right, sorry about that. I started looking the other way, so I wasn't talking directly towards the microphone, and my apologies for that. The other two earnings that I've been focused on for tomorrow, and I see you mentioned U.S. Bank. Bob, I'll pull that one up as well. But Bank of America, I don't want to do anything. We've already moved 3.5%. I look at like JP Morgan up 2%. That's actually pretty in line with a normal earnings move now after the rally that we had all day yesterday, the rally that we had this morning, the pullback that we had after this morning's initial rally. It kind of ended up right at the norm. Like Goldman pushed through 600 so far, hasn't been the magnet that I was initially thinking it should be this morning. Pushed through it a little bit more, but we got so much follow through out of these financials in the big movement in with this prediction that we're going to have the same kind of earnings for Bank of America. Bank of America normally moves around that 2% for earnings, and we've already moved 3.5% today because of their correlated stocks having good earnings. So I think that mutes the potential upside. If it comes with good earnings as expected, maybe we only get 2%, and that would be pretty aggressive to me. But, stopping at 48, if earnings come out poor, that's where I think that there's a real potential here for some returns, and it may go back down to 45. But that's, 45 on the downside, 48 on the upside just seems like a tough one to play here, even with half strikes. I'd rather just play for the pin after the move. 48 has good open interest, up to 49 does. If Bank of America has knockout earnings, I'll look for pin plays tomorrow, just playing a 2-day stability after we get the move in this particular instance. Morgan Stanley, kind of the same idea, where we have, I think, a skewed distribution where the upside is a little limited. The downside has more potential after getting a 5% rally today. So effectively in line with Goldman's move, just a little bit less than what Goldman already moved. This normally moves 5% on average, but I think we're looking at like a 2% upside for bull and 6% downside for bear, maybe 7% downside for bear. And that would put us back down near these lows, 122, 123 range, upside towards the previous highs, 135, 136. And again, I think that just pairs off better with a trade after the fact. And as you mentioned, US Bank going to be about the same. Rallied 4% already, getting ahead of ourselves, saying this is going to just match what we saw out of everybody else today. Normally a 5% mover. Upside's probably diminished by the fact that it's already priced in. Downside might be a bit more extreme. We could see 47.5, 6% to the downside. We can see, 52.5 maybe to the upside. It just seems a little harder to pinpoint these moves given the already aggressive movement. 52.5 seems like it's what people want. 10,000 open interest, 8,000 volume today. And then to the downside, that open interest at 45 looks like a potential magnet, but God, I think everybody would be very disappointed if we saw all the way down to 45. 48, 47.5. Maybe a little bit more realistic here with that open interest of 47.5. Options are very cheap. If I'm worried about the bear case, it might be better off just buying the 49 put and forgetting about the rest of it. So, or not playing it and just letting this one happen and looking for other moves elsewhere. The UNH seems a little bit more probabilistically in my favor than trying to bet on or against banks after what we saw this morning. Oh no. Bob, are you okay on audio? I know Fred's saying that he's getting audio in and out. If Bob or anybody else can let me know if they're having any audio issues, I would appreciate it. I can plug in I'll adjust my computer a little bit here as well to see if that helps. And if it continues, Fred, let me know. I can always plug in an external microphone that I've got on my other computer if that might help. So we'll see how it goes. Yeah, I'm seeing some all goods here. So might just be you, Fred, but if others start to hear it, let me know and I will adjust as needed. Thank you, Brad, Patrick, Bob, and of course, Fred. And I apologize for the audio issues. I hope it's something that just kind of fixes itself, because that seems like that's the best thing with tech, when it just fixes itself. What else we got here? Yeah. BSX, Bob, you mentioned that one. It's good one to look at. I did look at that one as well this morning as maybe an interesting potential breakout candidate. We are now pushing to a new high, close to it, 12 cents away. Today's high, though, was above the previous high. That looks like it wants to resume the bull trend and be a nice source of capital allocation after the gap up on the 8th. Very nice little bull flag, bullish yesterday, following through today with the market tailwind, and that one looks very good. The other one I mentioned this morning was HPE. We're staying above that 23 level, so I like this one today. This is one that I wanted to add today as long as the market was holding up throughout the day, and I'm looking at February 23 calls. So they were about $1.03 this morning, 10% higher now, but 10% higher with the stock up 20 cents. It's just in line there. It looks interesting to me, it's part of the aggressive power trader signals for today. And the reason I like this is that we're now above every price that we've traded outside of the earnings bullish day, which was followed with a bit of a pullback. Reminder on December 6th and 9th for tech on the whole. The 6th was there we go. 6th was a bullish day, and then we pulled back to lows below the previous day's high. Below the previous day's low. So this was a little bit of market behavior pushing it higher, HPE, and then pulling it back lower. The price that I'm kind of looking at here is the low of that day, which lined up with the highs here, and we're above that. So if market bullish behavior is going to resume and tech is going to be pushing, I could see 24, maybe even 25 for HPE. And that's where those February 23 calls, I think, could really kick in nicely. What else we got here? We got Hood. Yeah, that was a breakout this morning. When Bitcoin is strong, we got to look at a couple of the brokerages that seem to perform well when Bitcoin is strong. Robinhood, Coinbase. And Coinbase is coming off of a pretty terrible last month. Hood has the breakout. If you prefer to trade the breakouts to new highs, Hood definitely looks good there. But I like the way that Coinbase is setting up here as it pushes it up against this falling highs level and pushes a little bit through it. It starts to set up for me that move to 310, maybe 330 even. Especially if Bitcoin stays firm. I think Coinbase is just an interesting name here right now. That'd be a call spread for me. If I'm going to target 330, like a 290, 330 or a 300, 330. If we only go to 310, the 300, 330, a small winner. If we go all the way to 330, it's got that leverage potential from $7.50 up to as much as 30. I don't want to be long the 310 call. I prefer the 290 or the 300 from the perspective of what I need to have happen in order to get paid on that. And there may be a stall at 310 or even 320 here where we've got large open interest with 31,000 contracts. And 320, is near that high point of resistance before. 330 would be next above that, and then up to 350. So if we only achieve 310, I still want to get paid, and that's why I don't want to be long the 310 call. It's expensive. That's the problem with Coinbase block. Let me pull them up. Probably. Yeah, so very similar chart, same kind of concept then. So if you're looking for something a little bit cheaper, Bob, thanks for the look here on block. Very similar chart to Coinbase. Looking for a 50 target. Maybe up to 55. So again, I'd be going into like a 48 call that's going to make money if I only go to 50. Maybe selling a 53 call to reduce some of the capital expenditure. Because if we only go to 50, I don't mind trimming the cost by selling out a higher strike. And if we go all the way to 55, I'd likely be out by then anyway. As we get towards 50, trimming position, maybe letting the balance ride towards 55, or just going into a 48-53 call spread in order to get some leverage in return on either a move to 50 or all the way up through the 53 strike if it happens. So similar look on the chart. So good call there. Other ones that are expensive, MSTR, 400, 420 range target. Options are very expensive in MSTR for the crypto names. So, I always look at Marathon, a nice bounce back coming off the low level, very clear level to get out. If Bitcoin reverses, this gets below 16.5 and it's done, right? So I've got very well-defined risk here. The low on January 13th was 1640. The low on December 31st was 1664. So right there at 16.5, plus or minus a few pennies, looks like a stopping point with a rally potential to 25. So if I've got $2 downside and $6.50 of upside, it's a positive R&R if Bitcoin breaks out. Riot, same kind of concept. Been a little bit better than Marathon. But it's a cheaper name. $13.50 stock. Could go to 16 to test the previous highs. BTDR had always had done really well through this December time period. Finally got the dip, and maybe that's another spot to look for a retest of the highs at 26. So Marathon has probably the best defined risk in that we're closest to the lows, but that also means to me that it may be the worst fundamental company in the crypto space. So a little bit of concern for that reason. ISRG. Oh, you noticed it before the earnings. Yeah, so their earnings were supposed to be the 23rd after market, and I guess they pre-announced this morning. I didn't catch, I don't know if they rescheduled it and it just didn't get caught by Seaco's live vol or by the earnings whispers that I normally use for identifying my upcoming earnings. Very nice performance for them. Honestly, not sure why they decided to go ahead and let it out or let the cat out of the bag. Maybe somehow it was starting to get leaked, but really nice performance for them. Started up the day at 5:55, but you look at the 15-minute chart, it was only there for a matter of moments. Kind of opened at 5:55, and then within half an hour, we were pressing 575. Got a little bit of follow through since then, but really nice performance for them. If you got it on the open, you were the big winner as we made the new high above the December 6th high, and then just kept pressing. Once this implied volatility gets down towards 22%, maybe it's more tradable. The preliminary Q4 revenue means that there's a final number, I guess, still coming out on the 23rd, but they're leaking their numbers in order to get the market rally going that much more for them. Wells Fargo. Also earnings this morning also stand out. We were looking at double flies here, thinking about 75. We just pushed through it. So the double fly was okay. The 73, 75, 77 right now is still about 65, 70 cents. But it was the big win that would have happened if we had pinned 75. But this morning we looked at 74 and now 76. So chopping around that level actually may be an interesting one for me tomorrow to reevaluate a pin possibility at 75 if the market is slightly weak. So if like Bank of America, Morgan Stanley are a little bit lower than expected and financials pull back a little bit as a result, maybe that 75 pin comes into play. And if they're bullish and Wells Fargo jumps on board with it, 77.5 pin starts to come into play. So, again, just little expiration dynamics to look at for the market coming to the end of the week. With January 17th options, we've got much bigger open interest since it's the serial month, and that means bigger magnet potential in the next 48 hours. So certainly good to monitor that. The other one from the aggressive power trader that I think is kind of interesting today is Cardinal Health, another healthcare company. Had the gap up yesterday, really in a nice bullish trend for the last month. Testing the highs, trading right at yesterday's highs. It looks like it's got potential here. We're certainly finding some resistance. It didn't get the follow through of the market today, likely because we're just seeing sellers at the previous highs. But if you like the momentum potential here, a lot of decent open interest here at the 125 strike. Very illiquid on the options. 20 cents wide for options expiring on Friday is kind of ridiculous. It's not a huge volume name, but it could be an interesting stock to trade in. Maybe using 123 or the January 8th high at 122.83 as a stop out point. Today's low was 122.49, another potential stop out point in that range. And then if it does get that continuation through, it looks pretty good. But might just be a better stock play with the liquidity of the options kind of minimal there. Yep. All right. So let's see what else we got going on. I want to look at get a little ahead of myself here since I'm going to be on the close tomorrow and Vlad will be on for the open. But Thursday after the close, really kind of nothing. JB Hunt is semi-liquid, kind of similar to CAH. $186 stock, no real keyed in levels. 5% puts us at 195 or 175. 195 is all the way up here. 175 is, it's kind of in no man's land. It's near the highs, but not there. It's near this little consolidation area, but not there. I don't love anything for tomorrow afternoon, but Friday morning, I already mentioned State Street and Regions and sort of the banking side of things. I do want to look at Fastenal. Schlumberger, I'll just note real quick that here you go. 2% expected move, or normally. We have had 4.5%. Random walk behaviors about 1.5 to 2% already. So it's effectively earnings are kind of a non-event for these energy companies. But, and this is my big but here, this could be that first lead indicator for some of the other oil companies, the OIHs and the XLEs. If Schlumberger has bullish earnings after this nice bull run here over the last month, that could help set up that much more interest and intrigue in XLE and OIH and set up a bigger trade in that sector going forward. Because as you see, XLE and OIH, they've been on a nice tear here with USO going to new highs and up another 3% today. Oil has just been dynamically explosive here. So with oil prices up, people are starting to notice. The other one that I said I wanted to look at was Fastenal. So fasteners for Fastenal. And you look at that, it looks like the utility chart, right? XLU. Let me pull it up real quick. It looks a lot like XLU. Fastenal is wholesale distribution of industrial and construction supplies, so fasteners, bolts, screws, nuts, studs, related washers, etc. With home builders starting to recover, this could be another interesting play in that sort of space. When I look at the earnings here, the potential is for 5%, but recently we've been looking at 7.5 to 10%. We had 6.5, 7, 7.5, 9.5%. We have a couple of smaller moves, but a lot of decent sized moves here, and it's pricing in 5% right now. Over the last 2 years, that's right in line with the realized move. I wouldn't be surprised to see a big move given where we're at in the chart. So 5% would put us right down to, the 71 level, the previous low. But on the upside, this comes out bullish. Am I looking at 80, 81, near this low in November? Maybe there's something there. Not a lot of open interest. We had a adjusted strike base here. So we have the 79.62s instead of the 80s. And that might be screwing with some people a little bit here because we don't have an 80 strike. We have an odd strike. But I feel like this could have that, put butterfly plus call spread or outright call kind of trade instead, looking a little bit more dynamic than what's being priced in. So if 80 is really in the cards, any of these calls honestly look decent. The 79.62s, maybe not. Those are kind of a wash, but I could probably look at something like a 77.5, 79.62 call spread for 50 cents. Because right now, 35 to 50, 45 cents, something like that. And it's got 5-to-1 payoff. Hedge it with a drop to 70. With like a 72.5, 69.62. I guess I'd use a 67.12 broken fly. It's going to have weird margin because margin likes it to be symmetrical on the butterflies. So if I'm $2.50 different here and $2.88 difference here, it actually miscalculates and says I have more risk, even though I actually have less risk than a normal traditional butterfly on the put side. But it does look like there might be something of interest there to play off of for a target of at lowest, really 71 looks better than 70, but trading like the butterfly on the low side, just because I don't know that I see it dropping below 70, and then the call spread on the call side. XLB, you like? So yeah, the materials. Yeah, so I guess similar chart if you wanted to just trade XLB. I mean, I guess XHB looks almost dead on with KB. You know, well, not today, I guess, but you know, KB Homes had the big bullish day and off of earnings, and then XHB popped and held, and then today popped further. So if you're thinking it could have a kind of same conceptual result, yeah, maybe XLB is a way to do some exposure without getting into that funkiness of the options in Fastenal itself. And then targeting like 91 if we go bullish in XLB. Oh gosh, well, we're probably not going to go to 91 off of Fastenal earnings on their own, but could go to 89 off of the earnings day. And if that's the case, then these 88 calls, they look awfully cheap. How much of XLB holdings? Do they have much Fastenal? No, so they're not in the top 10 holdings. So on its own may not be enough of an impact. Let's see, where do I see it on here? Holders. Vanguard and BlackRock. I mean, these are the ETFs. Here we go. Little tools we got. So VTI. Yeah, it's all small numbers. I mean, SHCHD has probably the biggest holding of Fastenal at 1.6%. And that's not going to really move the needle too much, I suppose. But if utilities are continuing higher, Fastenal could be, and Fastenal could just be the booster that's needed there. So, you know, I like the idea, but I'm guessing that Fastenal isn't going to have an ETF that it really moves here. Percentage of ETF, IYM. Let's try IYM. Maybe that's a little bit better with 4.5% weighting in Fastenal. Yeah, no liquidity, no options open interest. Never mind that. Yeah. All right. And none of the other ones look. Yeah, then we get too small on the name. So Fastenal just might have to be a minor play because of the funkiness of the strikes, or a non-play because of the funkiness in the strikes, but it could be an interesting indicator of how materials and home builders and stuff are moving if they have bullish earnings or bullish revenue projections coming out of their announcement. SHW. Oh, Sherwin-Williams. Their earnings are on January 30th. I mean, that could be the other alternative, is just to wait for Sherwin-Williams in a week and a half, 2 weeks. How much? I mean, they don't have weeklies. They don't have much volume, much open interest, or much liquidity. You know, that it's kind of a space that doesn't always generate a lot of interest, so it becomes a little bit tougher. But if you can get it right, you can really get paid on those, because the market's not necessarily paying as much attention to it, and that actually offers some sort of mispricing if I can get my execution at the right price point. Ugh. SMCI is still lagging a lot on the semiconductors. Just hanging right here near the lows. I mean, if we go risk on SMCI, I know it's one of the late movers in semiconductors, but maybe there's some catch-up trade there if semiconductors start to get some leadership. Let's see. What else you guys got going for now? Ooh, WMB just went into the red for the day. OKE in the red now too. Now, OKE is actually holding up pretty nicely, trading near the highs. I do think that there's some rotation element out of these names that makes some sense right now. OKE holding up tells me that maybe WMB got a bit overdone, as I had kind of initially thought this morning. As we got up to 59, it was already towing against the highs. Now that getting pulled out of an OKE going into it, people are doing that rotation that I was looking at this morning as well. And it seems like that's just kind of the nature of the game for today in WMB. It doesn't mean WMB by any means is bearish. It just means on a relative basis, people see value in OKE more than they see it in WMB. Oh, LNG. I don't know why I always forget to look at LNG, but LNG is just, yeah, certainly the leader here, certainly the breakout star. Drag up WMB again, since I'm still in a little bit of WMB, please, so that I can get that exit at a better price. But I still have a little bit. We're almost. I mean, it's still a nice winner. I just wish I had taken it all off at 59, and tomorrow's another day. Maybe it gets it tomorrow back to 59 or even 60. Who knows? But we gotta trim when we see the opportunities and rotate when we see the opportunities, and that's kind of still the name of the game for the market. It's good to see some rotation in a bull market, because if it's not rotation and it's buy everything, you just wonder when the buying runs out and the cash runs out. We're still not going into big tech too much. Apple only up 2% today, but it's just been a disaster for them over the last month. Microsoft's still near the lows. Amazon's been relatively good compared to those names, at least. Meta, relatively good. And we talked about Tesla this morning, and it's just continuing firm today. But I still think Tesla, I could trade it for 460, but the market behavior in Tesla, 460 is a 2-day move. Today we already had $30. Tomorrow we repeat it, we're at 460. We could also wipe right back out if the market decides to start reversing tomorrow. I do think Tesla over the long haul should have some benefit of Musk's affiliation with the political structure right now. But does it mean I want to be trading it today? Probably not. I think I got to wait till after earnings and start to look at when I can get back in with earnings already wrapped up. So, STNG I have not looked at today. Yeah, so kind of the same situation where we've got a rising high. Today we didn't make the new high. But, as long as oil's staying firm, I'm not sure I see a liquidation risk here. If oil reverses course tomorrow for whatever reason, that may be a short-term pullback. As long as it stays above 53, above the high from January 7th, I can feel really confident. Above 51 and a quarter, I can feel relatively confident. But if we start making lower lows now after today, if tomorrow we get below 55 and change, $55.14, so call it below 55, it starts to look like a potential pullback, maybe down to 53 and a half or 53, at which point I look for a bull flag. But over the long haul, I still like STNG as a hold. What's the call spread up to now? 335. So I think last I looked at it was 330. So up a brand new nickel, but nothing major there. It's not telling me to sell necessarily. It's just not saying need to buy yet. But if we get back above this, what was the high here? 56.74. Today's high is 56.58. So we're towing against that high of the recent move, which also lines up with the November 20th high of 56.55, a penny above that right now. Yeah, it still looks like this wants to go towards 65 to me. So I think it's a good hold. And if we start to get a little bit more momentum, that's when I'd add, if not in. And I didn't get into this one yet, but I think if we get a little bit more bullish tomorrow, I may go for that and say I got to buy it then. If not, if we get a bull flag, I'll wait for the pullback towards 53 and then look for an entry at that point. So I think right now, it's definitely looking more like buying strength as opposed to getting a dip to buy. But tomorrow will tell us for sure, since we're not going to get above Monday's high today, barring some drastic volume buyer today. Pretty low volume today and yesterday, though, as we consolidate here after this nice run from 50 up to 55, 56. You got to double check. I didn't see if there was any. I want to see if there's any other big names that I missed for today's movement. Yeah, SRG, Wells Fargo, Citigroup, Goldman, Morgan Stanley. Oh, Home Depot had a good day today as well. I'll look back at, yeah, okay. I mean, I don't see much to trade there. But FDX, if the economy is good, normally I would have seen FDX continuing firm here, and it's a bit surprising. Boeing, same kind of idea, still drifting lower. Are Jets continuing? Yeah, I'll just look at Delta. Okay, so we're still consolidating post-Delta earnings. We've got United earnings next week. That might be needed to get the next leg higher in airliners. So we'll see there. Oh, TNK, thank you, Bob. TK Tankers, yes. So they're same kind of concept as STNG. I'd be looking for about 55 here. So same kind of trade setup. The other one I always mention is Nordic American Tanker, and that's just a stock trade, not an options trade. So if you're looking for a cheap stock to play around with and you want to buy or sell stock positions, NAT kind of goes in line with it. It could go to 3.5, so 18%, kind of a 17% rally. It could be another interesting avenue to play if you prefer stock and want a lot of liquidity since it's low dollar. So, all right, folks, I'll be on for the close tomorrow. I hope you all have a wonderful evening. We'll see how those earnings play out in the morning. I mean, if we get bullish out of Bank of America and Morgan Stanley after the bullishness we had from this morning's names, that may be enough to really trigger some buy stops for the market and get some people more aggressive. So we'll see how it goes. Have a good night, everybody.